Hi, this is Matt Craze. I'm Spheric Research, and I'm back again with a podcast, and I'm delighted. I'm here in Santiago in Chile, and I'm delighted to be joined by Kimberley Player. Kimberley has come into the aquaculture industry from an investment perspective. You're working at Equilibrium Capital, head of research. That firm invest in aquaculture. And Kimberley comes with a very broad range of experience in investment, especially in real estate. So it's quite interesting to be able to talk to you because you can really tell us about your experience in investing in aquaculture as an investment class and looking at it with kind of fresh eyes, in a sense. So I hope I've done you justice. You work as an independent consultant now, and so you are still involved with the industry. And I know that you've been working with Peritus Capital, Howard Tang, and I've really enjoyed reading your research as well.
Thank you. It's been fun.
Yeah.
No, if you told me back when I was doing more traditional commercial real estate research and investment strategy that I would be looking into fish farming, more than 10 years ago, I would have thought that was a little bit nuts. But it has been absolutely fascinating to take that real estate lens and kind of apply it to infrastructure and assets along the food and agriculture value chain.
Yeah, no, perfect. So could you tell me a little bit, just to get us started off, you joined Equilibrium Capital, and I was really following that particular fund because it raised a lot of money to invest in alternative proteins, which in a way is heavily linked to the aquaculture story, because one of the big challenges that the industry needs to solve is proteins that can replace fish meal, for example. So how was it, maybe describe a little bit that journey of how you found Equilibrium and you moved from real estate into this world?
Well, to be honest, I was a little bit jaded in the real estate world, office, retail, industrial, multifamily, and a lot of sort of more short-term profit outlooks. And I wanted to do something more sustainable, something that had more impact, and that's what actually first led me to look to Equilibrium. At the time, the company had two main investment sort of themes. One was controlled environment food production, and the other was carbon transition infrastructure. So one fund was invested in a lot of waste to energy projects. The other, that is more relevant to the aquaculture, was actually more invested in greenhouses initially. So produce growing facilities.
Yeah.
What I was asked about 10 years ago was whether it made sense to extend the mandate of that fund into areas like aquaculture, because technically it was a controlled environment food fund, and aquaculture is controlled environment food production. So that started me down, you could say, a rabbit hole, but it's been a really fun one, looking at market dynamics, looking along the value chain, and looking to see where there might be opportunities to invest, whether on the production end of things or more upstream in aquafeed.
Yeah, perfect. And at the time, there have been directed RAS investments in greenhouses. You see the Superior Fresh, it's one of the largest CEA ventures in the world, and that had the salmon farm attached to it. But actually, eventually, you ended up looking at a deal which was more traditional marine net pen aquaculture.
Yes, it was a long journey to get from one to the other. We were naturally asked about aquaponics a lot when people heard we were interested in aquaculture because of the existing greenhouse portfolio. I should add that Equilibrium's investors were primarily institutional, so not typically early stage investors, looking for more mature, established investments versus first of a kind facilities. So there were a lot of risks, little red flags that went off in my colleagues' heads when you said we're going to add fish farming to a greenhouse. At the time, and this was around 2018-19, probably when we first crossed paths, there was a lot of hype around the mega scale Atlantic salmon full-blown sort of RAS projects. Everybody was going to build one that was going to be 10, 20, 30, 90,000 metric tons. And we're looking to investments of upwards of $200, $300 million. And that also is scary to an institutional investor. That's a huge commitment. So over the course of a couple years, a lot of research, a lot of networking, we came around to thinking that hybrid models, at least initially, might make the most sense as the technology was proven out. And that's the sort of idea that you've written a lot about, I know, in the salmon space, just using a RAS facility for a longer grow out period in order to kind of enhance the yields of the net pen production.
Yeah. Well, one of the things that I was particularly interested in with the Pacifico deal was you were getting into the premium whitefish market.
Yes.
I've recently finished an industry report with NOAA in the United States on cereal aquaculture. One of the challenges there in that space is there's no existing research
Right.
on the species. There's no supply and demand information. You have to go and get it all of yourself, by yourself. So you don't have for example, Kintali that would do your salmon supply and demand numbers.
Right.
You've really got to go and piece it all together. How was your experience with that?
Well, it was challenging. I mean, you're right. With the salmon, you've got transparent data, price indices, and there was none of that. Pacifico had done some internal research, and we actually hired a third-party sales and marketing expert to give us some confidence that this particular premium whitefish market was going to be able to be big enough to handle the expanse in capacity that we were talking about investing in. But it is very difficult, especially coming from that real estate background where I'm used to seeing, 20-year history of vacancy rates, rental rates. That just doesn't exist. That's where I think spheric actually fills a huge void in the aquaculture world. But we had to do a lot of really hands-on primary research with the distributors, with the sales staff that the company had, to give us a level of confidence that they would in fact be able to sell this fish. Because, and you mentioned my work with Peritus, the subject of a report I did for them it was earlier this year, was, if you grow it, they won't necessarily come in terms of downstream distribution.
Yeah. I mean, a couple of years on, when you look at these markets now, and you look at, let's say, if you're going to make an investment outside of salmon and shrimp, how would you feel about that now? As do you think that there's a space for certain species? And
I absolutely do, but I think you need to look at it as more of a regional, local market. I think it's one instance where scale doesn't necessarily help your economics, because you can have the best production. And I'll use yellowtail as an example, because I think this has happened with one particular company in Europe. They've done an excellent job on the production side of things, but educating the market on the product that isn't necessarily as familiar as salmon has been challenging. So it's almost like we have no problem growing this, but how do we open more channels to sell it?
Yeah.
That said, I think that having a higher value species and a differentiated niche is important. I think there's absolutely room for that. Where I struggle a bit is with the commodity species, where people think they're going to get a premium for growing it sustainably. That is a challenge as well.
Yeah. That is interesting. Yeah, it's over time. Do you think maybe the premium, like for example, if we talk about the RAS space, do you think maybe these companies should not be baking premiums into their models?
I think they should not be baking premiums into their models. Not to say they won't be able to get one, at least initially.
Yeah.
If you're talking 3,000 metric tons. I've been working with a client who's looking to do Atlantic salmon in Texas, for example.
Right.
And we're positioning that a lot on local pride, Lone Star salmon, grow it within the state. Will there be a premium there at a couple thousand metric tons? Quite possibly. At 20 to 30, it gets a little more challenging. And I think you need to make your economics work at commodity pricing if you are, in fact, playing in the commodity space.
Yeah, it's interesting. Given that you're involved in that project, I'll ask you about the States as well. We saw a number of projects that were earmarked for the United States. Atlantic Sapphire made it through the environmental permitting process, which seemed to be one of the big challenges with the States, and has obviously gone through, most people that follow this podcast will know it's had several challenges. Right now it seems to be doing a little bit better, actually. And given there's now the tariffs and there seems to be some permanency to these tariffs, salmon's doing incredibly well in many channels, in America still, in the sushi channel, for example. Do you think the doing salmon RAS in the United States is a good idea?
I do, yes. And the trade issues are one reason for that. Where I think the states, and this puzzles me, to be honest, has fallen down, for lack of a better word, is the lack of government support, which you see in Asia and you see in Europe. This is a country that imports over 95% of its seafood, and yet is the second largest consumer of it in the world, and currently has a very America First, administration. And you would think that there would be some more support for local production. I still think there's a lot of hope that will come about, some form of incentives. But I think that growing salmon domestically absolutely does make sense. It's the economics, though, that are challenging. I mean, better than I how expensive it is to, build a full blown RAS facility, and the just upfront getting the necessary permits and environmental approvals is a huge part of that.
Yeah, I'm unfamiliar with Texas as one of the states to get that done. But where do you think the RAS on the RAS side now? I mean, obviously we're 2 or 3 years down the road from perhaps when you were looking at it, the Pacifico deal, and there's a little bit more evidence now. There's some more operating data that's come from these facilities. There's some of these companies are publicly traded, so you know pretty much everything that's going on in these facilities. How do you see the trends on RAS? Do you see that there is a move towards better operating statistics? And
I think so. I mean, I think we're starting to, I hope you are starting to gather some data on this so that investors can get comfortable, so they've got some benchmarks. So it's not just $1 per kilogram with no context as to what that sort of investment should be, or what yield should be, for example. That's one thing. And again, falling back on my real estate, it was, the data just hasn't been there, and it's hard to get folks comfortable with pulling it out of thin air. I do think, I was at the RASTech event in San Diego last June. There was a lot of talk of a move. Actually, it was very pronounced talk of a move to smaller scale production. Yeah. It's almost done a 180 over the last couple years, from the mega projects to now everybody's doing smaller projects, modular projects. People are talking about sort of franchising out technologies. So I think that it's sort of, I don't know if maybe solar is an interesting comparison, that went from these mega sort of power plants, but down to more fit for market, local level distributed systems. And I think that probably makes more sense, both from a production, distribution, but also financing perspective. You're not asking investors for $500 million.
Right. It's interesting. Yeah, I was on a trip to Japan recently, and I visited the pure salmon site, which is 10,000 tons a year. And they had finished the hatchery, and there was literally a dozen bulldozers of the largest kind that were lined up, ready to start the main grout tanks. The opinion of the pure salmon guys was that by doing the big site all at once, they were able to lay out the piping in a way that was going to work for the entire system. Whereas if you do it piecemeal, that becomes challenging. But then I've talked to other companies as well who've said that the smaller modular approach works. So
yeah, I mean, there's obvious economies of scale. I think that another company that has been successful there is Salmon Evolution.
Yeah.
And they've got big plans. HEMA is probably another one. But for the most part, I do think that that from a financing perspective, a phased approach is going to be better from a capital raise perspective.
Yeah, that's interesting. Actually, one of the companies I visited on that trip was FRD, which is a trout project, and they ran. The majority investor is Mitsui, and they ran 50-ton a year pilot plant for 2 or 3 years to test the technology, because there they need a lower amount of water intake, because the freshwater intake is warm, which they have to chill, and you can't afford that. So you basically need to denitrify the water. They had to test that technology first, which they did, and they're now building, I think it's around 3,000 tons. And then they'll go to 10, but once they've proven it at 3,000.
Yeah, that proof is so important, and I understand the frustration of startups. I mean, I have been talking to them with my investor hat on. I see the frustration. I think, we need to prove this out, so we need the financing to do that, and it becomes a chicken and egg scenario, because you've got your investor sitting there saying, well, I need to see a proof of concept.
Yeah.
And I think what it really comes down to is looking for the right kind of capital. Back to this particular startup in Texas, probably not ready for institutional capital yet. Actually do have a proof of concept overseas, which is great. Actually growing fish, you can see them in the cameras. That gives investors a layer of confidence. But I think you are looking to more catalytic capital, which not necessarily philanthropic, but catalytic, concessionary, patient capital, family offices. I think if you look at what Christy Walton's Cuna del Mar has done in Baja, that's been less of a we want to make a quick buck, but more we're actually long-term investors in the resilience and the economy of this particular geography. I think it's just really important to look for the right kind of capital for the stage your operation is at.
Right. And one of the things that we've seen with our report is that there's this irony right now where there's record investment, but it's actually happening in quite a limited number of companies. So
yes,
we're going to almost get to $2 billion in deal flow this year, but it's really it's getting into, let's say, 10 projects. All of the speculative interest that was around 5 years ago is gone.
It is gone, and that is a broader issue with ag tech in general, and I almost hate that anyone ever put those.
Get back to that,
I hate that someone put those two words together. Yes, there's a lot of technological innovation in agriculture, and it's been very exciting, but it is not a typical VC deal profile. The risk return metrics are different. The time frame is different. I think what people missed initially was that this is farming. Yeah. And this also applies, by the way, to the CEA, Controlled Environment Agriculture world in greenhouses. Over-technified, the idea that you could pop in a fish egg or a tomato seed and bam, out the other end would pop a product without realizing we're talking about commodity exposure, we're talking about growing cycles. You don't want to fail fast when your fish take 2 years to grow.
Yeah. I watched an FT video yesterday, which was about the second wave of CEA, and I haven't followed that story for a couple of years, but they basically said that the deal flow dried up from venture capital to it was running at about $2 billion a year. It's about 200 million right now. That sounds about right with RAS, except that there are these projects in certain countries where we measure them on our country scoring index, which have decided to back this industry as the continuation of their fishing industry. So you see it with Iceland and Japan.
Yes.
And the institutional finance, which you mentioned, had an existing relationship with fishing companies, and they've decided that this is the continuation of that industry. And sometimes they're even dealing with the same people and the same companies. Yeah.
Well, where there's a familiarity with it, in Norway, your investors are a lot more comfortable. Where there is a national policy around it, and the UK, I know, has I forget the actual name, but it is some sort of food security policy.
Right.
Where there's a national policy that gives investors comfort that there's going to be government support for these. The Middle East has invested heavily in greenhouses and indoor farming for somewhat obvious reasons, but I think that is another layer that can give the capital sources confidence that they're in an industry that otherwise is a little bit unproven.
Yeah, and that's why I really like the topic of the research paper that you did with Peritus recently, which was to sort of think about this through an entirely different angle, which is the real estate investors. And how would you...
That was interesting.
Yeah, to get those investors into something like aquaculture. And but maybe talk a little bit about.
Well, it's challenging, and it was interesting because it felt like a convergence of my two worlds: the 20 plus years in commercial real estate, and then the last 10 in more ag and food assets. And the initial question Peritus posed to me was, well, this is real estate. I mean, there's land, there's a building, there's a structure. Instead of tapping into, say, impact capital or natural resource allocations or pension funds, agriculture, there's a lot of folks out there that invest in real estate. Can we convince them to open our wallets for ag and food assets? And the answer is, it's still very difficult. Investing in real estate, you are looking at the value of the building, the value of the land it's on, and the credit of the tenant. And what they call in real estate jargon TIs, the tenant improvements, those are additions. You may put paint and carpet in an office building, some racks in a warehouse, but they're fairly interchangeable. Think about the RAS facilities you visited. It's like those tenant improvements are the asset. Same with the high-tech greenhouse or indoor farm. The reusability factor is very low. Yeah. This is what I know a lot of people have come to realize in the last sort of 3-4 years. I can count almost on one hand the number of operators that can run a high-tech greenhouse in the States, like a really large-scale one.
Right.
You lose your tenant in an office building, you get another one. You lose your tenant in a RAS facility or a 90-acre greenhouse, it is very difficult to find another one. So a real estate investor who's coming in thinking, okay, high land value. Well, most of these assets are rural, right? Because cheap rural land is good for food and ag operators.
Yeah.
It's not like you've acquired a highly redevelopable, dense plot of land in Manhattan. The reuse is challenging. The data, we've talked about that, is challenging. So it starts to look more like project finance, which is, okay, now I'm taking on the risk of the operator.
Right.
And, am I sure that operator is going to continue to operate? And at that point, you are as much investing in the company. So a company like Equilibrium went from thinking we'll be landlords, real estate landlords, to, oh dear, now we have to invest in the company to keep it viable. And it sort of transitions that way. I think as you go, I'm talking specifically about the production end of the value chain. As you go downstream to, say, packing facilities, processing facilities, or cold storage, it's a very different matter. Cold storage is an asset class real estate investors have gotten their heads around.
Yeah.
There's 2 dedicated REITs now that are, there's a critical enough mass of properties that it makes sense to invest in them. They're still fairly specialized operations, but I think they look and feel a little bit more like commercial real estate. It's not to say you can't get wallets to open up for the production end. There are ways around it. Parent company guarantees, sort of sale leasebacks. There are ways to structure deals that can give investors more confidence. But when I started to really look at, these assets, they just behave a little bit differently from an office building or a warehouse.
Yeah, that's fascinating. Yeah, and it sort of there's an overlap with my world as well. I looked at the cold storage space, and I recall seeing a couple of those REITs getting into that space at the time, and especially heavily automated kind of cold storage sites.
They're huge. Americold is one of the big ones. They were the first to IPO. I think it was 2018 or 19. By the time they had private sector investment, and by the time they went public, I don't know the exact numbers, but they had a very large portfolio of properties. So I think there were some greenhouse and even some RAS people who have said, "Oh, our exit strategy is a REIT." Well, you have 4 or 5 properties. You are not quite to that critical mass yet.
Yeah.
So I think it's tougher the farther upstream sort of you go towards production.
The interesting now is with the United States as well, there are now 1 or 2 very large-scale failures, was essentially building sites that have RAS infrastructure on them.
Yes.
And a couple of sites that never got developed. You kind of wonder what the value of those right now, because obviously you talked about there's a very limited number of sites. So, for example, talk about companies when Aqua Bounty, Superior Fresh came in, bought that one site in Indiana, but now there's probably half a dozen sites that are available in the United States.
There are,
Yeah.
and I don't claim to wear a technical hat, but my understanding is you could, even if as an experienced RAS operator, you could come in, but if you want to do a different species or use a slightly different technology, I don't think it's that easy necessarily to reconfigure them. People seem to want to start from scratch, but it will be interesting to see if any sales comparables come up that you and I can use in our benchmarking from companies who want to reuse those facilities. I certainly hope that there is a reuse for them, short of just scraping out all the improvements and placing it as a warehouse.
Yeah. So changing tack a little bit, if you had $100,000 right now and you had to invest it in aquaculture, I mean, you can invest in quite dramatically different opportunities. You can invest in technology. There are even these ventures in Africa where they've actually been quite successful. Where would you be looking to spend that money if you had to?
$100,000 isn't that much. I would have said maybe.
I'm thinking like an individual who would have part of their savings and they had to put it into aquaculture.
Well, I like the idea of more processing facilities in the U.S.
Yeah.
You mentioned that there has been talk of, it's been mostly talk, but building more RAS facilities for domestic production. I think there's a lack of processing capability in the U.S. as well, and you completely blow all of your local benefits out of the water if you then have to send your fish somewhere else to be processed. So, and even for imports that are coming in from other countries, I think that some of the sexier opportunities seem to be upstream in the technology, the sensors, the cameras, the monitoring. We can talk a little about the aquafeed if you want, because that sounds like it's very promising, but as we know, is very exposed to price volatility in fish meal. But I like the processing. And I just think production is really challenging right now, unless you can find that needle in a haystack. And, I've mentioned this particular client I've been working with. It is an interesting proposition. They've managed to de-risk a RAS deal in rather unique ways by partnering with an existing U.S. farmer who has traditional ponds and excess land. So there are no permitting issues. There's no issues, developing infrastructure from scratch. There's already some processing infrastructure. There's already distribution channels in place. There's already a degree of expertise, albeit a different species. And again, the permitting hurdles have been cleared. So I think that's a really interesting model that I would most definitely.
So this company doesn't, because of the existing farm, they don't need to get any additional permits for.
They do not.
On a RAS farm.
No, they do not.
Wow. Yeah.
It is a zero discharge facility, so discharge is not an issue.
It's based on that that type of technology. Yeah. Wow, that's interesting.
And that may be specific to the state of Texas. It's a little bit more permissive than maybe some other states. But that is what my understanding is, and it's in investors' eyes, that's a huge
for sure
de-risk.
Yeah. No, it's very interesting. I'm glad you brought up the alternative proteins. It is something that the Norwegian industry spends a lot of time looking at. How do they reduce their dependence on the marine proteins? There are companies out there developing single-cell insects. They've all had a hard time. There's no type of parity on the horizon, price parity. And as you said, I think for an investor, the difficulty you have is that Peru is going to have a great year. Once in every 5 years, there's going to be a bumper harvest, and you have to tell your potential investor that you will not make money in 1 year out of every 5.
Your fish meal goes from 2,200 a metric ton down to 1,200, and your margins have just been blown out of the water.
Yeah.
It's challenging. I mean, I love the innovation that people are working on in that space. I have spent some time with my head in alternative proteins, everything from plant-based to insect-based to cell-based. And the holy grail, I think, for those folks is aquafeed, just because the market is so big. But I know a few that are taking it on right now. Again, another example of chicken and egg. The scale that the aquaculture producers require is not something these folks have achieved. And I think that the aquaculture, fish farming community, generally speaking, is quite risk adverse, understandably so.
Yeah.
So trying out novel aquafeeds could be challenging. I know a lot of those folks are looking more to high value markets like pet food, not a little more niche, but
right.
certainly perhaps easier to make money. And I think the trick with alternative aquafeed is you can't compete on price parity with commodities. You've got to differentiate based on functionality and on de-risking the supply chain. That would be my positioning pitch. I would be like, look, your supply chain is dependent on this. It's extremely volatile. I can give you consistency, and I can give you better functional ingredients. But
I guess over time, you get each El Nino brings about, it seems to the severity of these weather phenomenon seems to is more each time it happens. And it does, as aquaculture increases in supply in the world, and it is, there has to be a sort of breaking point, doesn't there, where if you're going to continue to expand carnivorous aquaculture, you really need this stuff in the long run. There does seem to have, there is a long-term pain point that you have to solve, and that should eventually make that business viable.
I certainly hope so. Sometimes things need to really break before people get around to fixing them. But I think some of the investment that big corporates have made into novel aquafeed companies, I think that's encouraging. And I think the other driver, you've got the downstream pull from folks who want more sustainable, de-risked aquafeed supply chains, but also I think the regulatory environment hopefully will sort of help move people along in terms of shifting. I know that the retailers are looking to organic seafood, for example. It's that sort of either, whether it's from a government or a downstream mandate, that folks will just hopefully have to start looking to these alternative ingredients.
Yeah, that's interesting. And do you see that the industry has been affected by, obviously it's been affected by the tariffs, but if there's a permanency to the tariffs, how do you expect, for example, the United States market? Do you just see Americans just kind of not really eating seafood and eating chicken instead, or are the affluent enough that they're just going to keep eating seafood and it will grow?
The affluent are affluent enough, yes, but I think for the majority of people, it will certainly hurt. One thing our seafood sales and marketing consultant for the Pacifico deal hammered into my head was every nickel matters. And the average person is going to go to Costco and pick the least expensive sort of fish, if they pick fish at all. I have spent most of my time in the U.S. on the West Coast in very foodie-oriented cities, but seafood is still an area that consumers need a lot of education on. I think that's true globally, but in the United States, certainly. So whether there's a permanency to the tariffs, I am not a public policy person, and it's just head spinning how things seem to change from day to day. At this point, I don't know that I'm as concerned about the permanency as just the uncertainty. Because how can you move any project forward when you don't know? For example, you want to build a RAS facility in the U.S. and your feed is going to have to come from Canada, and is it suddenly going to be 50% more? How do you plan around something like that?
That's very tricky, isn't it? And I think talking about the demand as well, it's I've been spending a lot of time looking at the sushi market this year and reading Sakana data, and basically the part of retail groceries in the United States that has any kind of higher demand is deli and ready to eat things that are already cooked. People just don't want to cook at the moment.
People don't know how to cook fish, I'm not.
Yeah.
I am probably in that category. I think initially when a lot of the salmon RAS technology was coming out of Europe, and people just assumed they would buy, the Biluns or the RAS 2020 from Veolia and set it up in the States and sell head-on gutted. No, you're actually not, because that is not a product format that is really in demand.
Exactly. A restaurant will buy it, and many restaurants won't go near a head-on gutted fish either these days. So you've really got a limited market. That probably feeds into the,
into the processing. There's my $100,000.
Exactly. Yeah. It all needs to be ready to eat, ready to consume.
Convenience is key, and just education. I mean, it is almost impossible to brand something in the seafood case of a supermarket. When you think about shopping for any other kind of food, you look for your favorite brands. It's really challenging.
Yeah, that's super interesting. Well, we're on 35 minutes. It's a good time for a podcast. So I think we pretty much covered anything that you think that we should have covered and we didn't.
I don't think so. I think we could talk about this for another couple of hours. And I just want to say I found the space absolutely fascinating. The tailwinds are there. The world needs more protein. Aquaculture is a fantastic source if done correctly. And I have thoroughly enjoyed the time I spent researching and looking at investments. And in part, that's due to the people I've met as well, yourself included. So thanks for the opportunity.
Thanks very much. It was great talking to you. I hope you've enjoyed Chile as well.
Oh, absolutely. The seafood is fantastic.
Yeah, it is. Super. Okay. Thanks, Kimberley.
Thanks, Matt.